Hey guys, welcome to another video brought to you by Total Control Traders. This is the weekend video. We're going to go through a lot of tickers. Get ready for next week. So make sure you are comfy and cozy. Got my comfy coat sweater on because it's time for the week. And let's get right into it. First one, Airbnb. All right, so we have reached and passed that ideal, the first ideal entry. But look at the recovery. My goodness. All right, so we came down to the GP in confluence with IPO high. The previous key zone, we can see resistance, then came back as a support, broke down under, but support again the next day, then support again. So this was the first planned entry. And if you look at the fib extension from the high to the low to the lower high, one-to-one extension has been reached. And that's why, partly the reason why we're seeing a huge bounce. Loving this chart. Do understand that we can go down to, there is another GP down below, which we can see one previous support from, but would anticipate somewhere around here is likely the bottom. So head and shoulders finally broke that neckline, saw a huge follow through by huge dip buying. So we got our entry in around the 150, nope, what was it, 165, yeah, right under the GP, 165-ish was our entry. And from here, let's see that follow through tomorrow. Airbnb on top watch. Next one I wanted to take a look at was IPOF. So first two, yeah, there's 5 top watches, but the other 3 we've already gone through on yesterday's video, the market review, Wayfair, Exxon, and PLTR. If you haven't checked out yesterday's video, make sure you check it out. So there's only 2 top watches for on top of that. The other one is IPOF. Huge reversal candle, long lower wick, and from here, let's see what happens. Where do we bounce from? So previous support, that's the only thing that I can see from here, because GP and everything's already been lost. But gonna have to see if this is the bottom. We were extended from a daily 8, and now we are seeing a reversal candle coming up. Similar idea. See if we get follow through Monday, Tuesday. That is key. All right, let's see if it's ABC. Nope. So this could just continue to sell off. There's no pattern in here. Not the most ideal for a play. Not as ideal as Airbnb. I'm gonna have to move this. All right, next 3 are the requested tickers, and we're gonna run through the previous requested very quickly as well to see what they have been doing. First one, WM, waste management. Interesting. Okay, so we have negated, yeah, we have now negated the bear flag or a bear divergence, and it is on a continuation of a run. Broken through the trend line. We can see 3 rejection, 1, 2, 3 rejections before a move up. So now is confirmed daily trend reversal. Lower low, higher high. Huge bull divergence as playing out. That's what's happening. All right, missed this the last time we reviewed it, but this is a huge daily bull divergence. Amazing setup. Bull divergence on the daily is a lot harder to spot, so when you do see it, make sure you enter with conviction. They have a much higher chance of playing out, as we can see right now. So from here, there is, let's see, 1, 2. So now this is also a inverse head and shoulders playing out. No, it is not, because this one, the right shoulder is lower. So from here, let's focus on the right side. What is going to happen? GP is coming up. Let's see what happens on Monday. We closed right below the resistance zone, or right on it. Yeah, so there is a zone around here. So we blasted through the first one. You can see multiple rejections from back here, multiple supports from here. And then the next one is multiple, well, there's 1, 2, 3 rejections, and then supports from here, and then rejections again. So we're right in that zone right now. Monday is going to be key. We are extended from the daily 8. So this chart will likely need a little bit of a cool off before the next leg up. But the daily bull divergence is playing out really nicely. All right, next is, if you're in the position, I will use the shorter time frames. Doesn't seem to respect the 30 minutes as much. Doesn't respect the hourly as well either. Perhaps use the hourly. Let's do this. Already 10 EMA seem to work a little bit better. Or even the 12. Yeah, we can see a little bit better reaction on the 12. So rejections here. Support. This one broke under. Then we broke under again, got bought up. And then support here. So use the hourly 12 on this ticker. Now, I generally use the 8, but on the chart that you can clearly see that it doesn't respect it as well. Try to find the EMA that does work from it and make sure you back test it. So let's say that if we were to back test this, you can see support here, rejections here, rejections, rejection before the break over. 12 works a lot better on this chart. All right. Okay, next is AMRA. This basically throws everything off. There's one candlestick on November 30th. AMRA. Am I looking at the right one? Hey John, gonna need you to confirm whether if this is the right chart that we're looking at, because it doesn't look to have much liquidity or anything, and it's trading at 0.01 cent. I'm gonna assume this is not the right chart. Not sure how you're gonna trade this one. It's basically more like a lotto kind of thing if you are looking at this one, because I don't see any other AMRA. Let me do a quick AMRA. Oh, okay. So yeah, if you want to trade this one, I would say it's more so lotto sizing. You know, just put a bid at 0.01 cent, and then on the day that you see that's like this one, make sure you sell. That's the only thing. I don't imagine there's too much volume on this day either. So let's say that we were to look at the hourly volume. I don't see any volume, so it can make it very hard to sell on even on a day like this. But yeah, not something that I would recommend trading. All right, next, APHA. So this is the wedge that we were tracking before. It gave us a breakout fake out, and then now we have broken down from this previous lower trend line. From here, what you could potentially look at. Now I hate doing this kind of trend lines because they generally aren't as strong, you know, just a trend line in the middle of a chart just cutting through everything. But with this one, you know, sometimes you can find reasonable resistance and supports. So on here you can see rejection, broke over support before gapping down and then got bought up, and then another support. Obviously we use that as where we draw it to, but regardless, a support. And now we broke down and got bought up immediately, still trading under the hourly 8. We can see a stall here as well. So going into Monday, Tuesday is going to be key. We are trading over that 30-minute 8, so that's great. Bull volume came in a little bit at the end of the day, unable to push it up. So a little bit of a red warning sign, you know, red flag. But overall, now instead of a wedge, and it's not letting me select it. This one's not so noticeable. So instead of this, what I'm seeing now, let's see if this works. Okay, maybe not there. For some reason my cursor seems to be off. It's gonna be something around something that looks like this. There we go. All right, so top trend line makes sense. Channel, triple rejection. Lower trend line makes sense. Multiple supports, gap down, got bought up right away. Support again. Almost came to it. You could draw a little bit closer. Would make sense to draw a little bit closer. There we go. So still supports. This one invalidates it a little bit, but yeah. So chart looks great. Descending channel could take a very long time to play out, and do understand if you're playing bull, you are playing against the trend. So from here, even if you were to see a move up to the upper trend line, make sure you take some profits in case we don't break, because now there is a lot more resistance upwards. Trend line, key rejections from here, as well as a key zone up ahead. So moving back up is going to be a lot harder. And do understand if we reject from here, there's a chance that your green position will become red because it is a descending channel. Okay. Next few we're going to go through a little bit quicker because they are reviews from previous requests, just to try to find decent plays. So amazing entry potential on HEPA. Met that lower trend line, huge buying came in, no volume, so there's been decreasing volume on here. $2 small cap. There is a chance that this is gonna move very nicely. As long as this lower trend line holds, this is an easy play. You get an entry off of here and just use the lower trend line as your stop. Next, GDNP. Look at this amazing bounce. We haven't viewed this for quite a while, and there were two, well, noticeable wedge from before, and we came back to back test where that upper trend line and lower trend line meet, close to where it meets, and we are seeing a decent bounce from here. Reversal candle, almost a hammer candle. Bull volume not so ideal yet, but watch for the follow through on Monday, Tuesday. There is a bull divergence that's formed as well. So trending up, and even if, oh, what am I doing? From here, trending down. Big bull divergence has formed. So would anticipate further upside from here. Chart looks great. Bull flag formation did not work out. 1, 2, 3. Let's see if there's any other confluences that meets up. Nope. Broken over the GP already. What if we were to draw it from back here? Not quite at the GP. Regardless, I think the chart should see further upside. All right, next, ZYME. Again, reminder, huge list to go through, so make sure you are comfy. So similar idea, big daily bull divergence forming. There is potential for a decent play here. Huge drop. Big upside potential, 93%. ABC wouldn't really work on here. So from here, we never fully got the gap fill. There is a chance that we're going to go see the gap fill now. Do understand that the ticker is still relatively weak. Triple rejection from the upper channel, and then just broke through all sorts of support. The only reason why that this is an ideal spot that we're bouncing from, because if you look from, oh, it drew it wrong. There we go. You could even call this a key zone from here. Yeah, previous rejection, right, before breaking over. And then this one broke down under. Didn't see much of a rejection and whatnot back here, but immediate back test of the key zone support. Then multiple supports again before breaking into the key zone and the support over. More support on this upper end, more support on the lower end. So because we're overextending on the daily with the daily bull divergence, anticipation would be to see further upside, but watch for a reaction around that daily 8, because we could see what the chart could do is similar to back here, go up to the daily 8 because we were extended, go up to the daily 8, and then slow fade into the lower part of the key zone. There is a play in here. I don't see daily bull divergence from back here, so this is a better setup than back here. There is a chance of this happening though, so keep that in mind. Don't forget to take profits off as they present themselves on this bounce play. Remember, the market is still essentially just bouncing. It is can't really say that it's reversed yet. We don't have that full bull confidence yet. SBUX, next one, relatively strong. We are seeing a bounce from the 0.382, and that is not right because this is a GP from back here. So we came to the most ideal. Wow, look at this bounce from GP. Jesus. So remember how I said this is a most ideal entry, which we were anticipating somewhere around here to line up with the lower trend line, but chart wanted to depends how you look at it. You could say want it to be weaker, want it to be stronger. You know, it was weaker back here during the pullback. It came to the GP faster than expected, but chart is stronger than expected because we bounced straight from the GP, did not lose it to meet the lower trend line again, straight from the GP, and now we are seeing another bounce above the GP. I want to say above the GP, so let's make sure here. Not right around the GP. Alright, so chart is still strong. From here, let's see continuation, and let me select it. Come on. Okay. Alright. So from here, let's see continuation, break through this key zone, and we will likely see new all-time highs once this key zone has broken, confirmed broken for the first time. All right, SBUX looks great. Still in the middle of that channel. Would anticipate another back test once we break into new all-time highs. Once we break into new all-time highs, would anticipate a touch of here. Now, let's see if that lines up with any extension targets. So from the lows to the highs to the higher lows. So from here, we'll be looking at, so we got the most ideal entry earlier than expected. All right. Now, most ideal exit would be somewhere around there. 1-to-1 extension target lining up with upper trend line of the channel at around 118.22. That would be the target. Next is TLRY. And I do apologize, I'm not too sure why the computer is extra slow today. Again, messy chart, choppy actions, avoid trading. So we can see messy chart from back here, rejection, fake out, over, doesn't work. Okay. What if we were to draw it to there? And then use the most recent. Maybe. Right, chart remains weak. Previous increased momentum, trend line, been broken. Now, this, I don't like, again, I don't like seeing reactions on a trend line that's sort of chopping through the charts, where basically this trend line avoiding the upper part of this. Then from here, we do see rejection, so it does work. Rejection again, broke over, and now we're potentially seeing a support. But this is still trading under the key trend line from back here, the increased trend line. And how come the color looks different? Okay, all right, yeah, so from here, if you're playing bull, we are trading over the hourly 8, so that's good. We did close over it as well. What you want to see from here is a bull flag on the hourly forming, even the 30-minute bull flag forming, and then the confirmation. Volume came in the end of day, unable to push it up. So MJ sector remains a little bit weak. Essentially, we held this key support on the daily, 2158. We held it. Bull is gonna need to see that reversal early next week. All right, next, AMRA. What a nice bounce from key zone. Previous high, previous all-time high, not all-time high, previous 52-week high, back test, and now gonna need to see reversal going into Monday, Tuesday. And SNDL. Now, reminder, on this type of environment, what you want to be try to look for is tickers that are already in strength, not looking for reversal. Majority are going to be looking for reversal, but that's why we're looking at ABNB, that there's strength that's already showing up with a decent bounce. SNDL, we are seeing decent bounce here. Huge lower wick. Hammer formation on the bottom of the trend. and a lot of these don't work anymore. We've lost the support. It's a bit harder to draw this chart because it's a smaller cap. Most of what you can play off of is going to be just simply support resistance, and those kind of charts make it harder to play. So there's going to be, you can see how many resistances are up ahead. This chart is going to be hard to trade, but huge lower wick, back tested this previous high. Lots of resistances up ahead though. Watch for the volume. That is going to be a telltale sign. Next, let's do VEEV. And then we're going to move on to the ARC tickers. So VEEV was requested by our dedicated viewer, DG. Let's see how the chart's been doing. Relatively weak. We have held the key zone. You can see multiple rejections from back here, then became supports. So this was a key zone to hold, but essentially with the lower wicks, double lower wicks, I would consider it a lot weaker. You can see how extended we were from the daily 8. So from here, would expect a bounce to meet the daily 8 and then further continuation downside. Chart is relatively weak. Another reason why we're bouncing from where we bounced from, 1-to-1 extension from higher high, higher low, lower high. This was a huge move down. A reminder, try not to play weaker charts, because if you're playing bull, try to avoid playing weaker charts, because essentially you're just going to be trying to catch something that may not even exist. Play with the trend until it ends. All right. Next, let's do the ARC tickers. Cathie Wood's tickers. First one, TDOC. For those of you that don't follow Cathie Wood, she's an ETF manager, and her callouts has been fairly on par, and she has a dedicated group of followers that like to see what she trades, buys, and sells. But do remember, ETFs, they cannot hold cash, meaning that their buys may not be a signal for you to buy. Essentially, during this type of environment, what she would likely be doing is selling those with slimmer chance of decent bounce, and then buying those with bigger chance or chance for bigger bounce. Okay, so it's good to review the tickers that she buys and sells, but they are not signals to buy or sell. Make your own judgment for it. Same with anything, gotta do your own homework. So TDOC, all right. You can see the increased momentum trend line, support, almost support. So depending how you draw it, this could actually very well be, let's see if we were to draw it to, come on. Still works. Support. So just needed to update that trend line. So from here, we are holding the previous high key zone. This is a big key zone. And frankly, I don't really like how it's drawn. I would rather use it here. And then the lows probably a little bit higher as well, just to be more accurate, somewhere over there, because you can see that's where these wicks went to, as well as this one. Yeah, this looks a lot better. All right, so we are holding that key zone, and this wedge is no longer in play, but this has been a huge drop on TDOC. Huge drop. 308 all the way down to 174, 43% drop. That's juicy. That is juicy. Low risk entry right around that key zone. However, we are trading over it now. We are still extended from the daily 8. There is a daily bull divergence that has formed as well. So not as strong. Still a bull divergence regardless. All right, let's do this. Let's add TDOC. That's not there. This one. Skills FSR. We're gonna review skills in FSR too. But all right, first one, TDOC. And also on the weekend videos, what I've decided to do is we're gonna try to do a recap at the end of the video for those of you that don't want to spend hour and a half on these videos. Just make sure you watch the recap section. Gonna try to recap on what are the top tickers that interest me, and we'll track them going forward as well. Try to track them going forward. All right, TDOC. So if we go to 0.382, it would be in that previous resistance zone, which would make sense. 225. So from the current price, that's still a 20% move. I like it. I like it. TDOC. RPTX. Now, of course, remember, you're going to have to keep an eye on what the overall market does. If you're playing balances, regardless of your ticker, because now the market is basically the whole market is acting in one direction. All right, key trend line hold, doji candlestick. Oh, you cannot find any more perfect doji candle. 1 cent off, open to close, doji candle. Wow, reversal candle, potential reversal candle, big bear volume, potential volume climax. Earnings was negative, very slightly. There's a good chance that this can reverse from right here. Hold of this trend line. Key zone up ahead. I'm gonna say right here, too high, a bit too high. So it depends how you want to draw this. You could draw it to the wick. Let's try that. Actually, it's not letting me select anymore. Okay. So draw it to the wick. Somewhat makes sense. Oh, somewhat makes sense. And then draw it to the wick. Doesn't make sense as much. I like it over here. All right. So potential reversal, doji candle, extended from the daily 8, not too far extended. And then last but not least, the fibs. It makes sense that if we were to bounce to this lower key zone, which lines up with 0.382. From here, if we see reversal on Monday, bulls gonna want to see that reversal on Monday. After a reversal candle, you're gonna need to see it for confirmation. Then from there, first bounce target would be around that 0.382. All right, next, BEAM. Beam. Did we look at this before? Because that is one heck of an ideal entry. Off by a little bit. Ideally, I wanted to see a touch of the GP. GP is drawn from the low of the trend line. So it makes sense that we're lining up here. Now you could change the trend line to the body. Yeah, that wouldn't work as well either, but we are off by a little bit. I was looking at this, you know, well, not during Friday's trading day, but was looking at it earlier. I think it was after hours or something. That's where the charts were drawn from. We're off by very little bit. Ideally, I wanted to see somewhere around 62.37. We're off by 50 cents. Could very well reverse from here. If we do, chart remains strong. We held this previous support zone, wicked under, but never closed under. So I like this chart. Beam, keep it on top watch. Let's add it. Gonna want to see reversal on Monday. Big potentials on this chart. Now if you were to draw, so say if this is the reversal, the spot for reversal, essentially what you'd be looking at as an extension target would be from the lows to the highs. Now this would be more so on the weekly time frame. Yeah, from the lows to the highs to the higher low. The weekly extension target is up at 167.64. That's more than double of current price. So there is a decent play here. Beam. Next, square. All right, square. So we held that key zone that we were looking to. If you were a bull, must hold key zone. Well, we already lost the lower channel, so you're seeing some follow through here. But now huge lower wicks are forming. We were very extended. Considering down here, we were very extended from the weekly, the daily 8. Gave everything back, a little bit of a red flag. This bounce, congrats DHA. This was an amazing play. You had an exit up here, you had an entry down here. Holy, good for you, DHA. That was an amazing play. And I think you sold somewhere around here because of that doji candle, which was another great call. Okay, because we are seeing lower prices now, and this key zone right here, we are holding. Potential for volume climax. Aside from that, you know, it's a low risk entry. Put your stop around just under that 200. Well, now it's 8% higher, so it's going to be a little bit harder. But yeah, there was a bottom fish play right here. You can see previous high, rejection, support, support. So it's not a strong zone though. That's the only thing. This is not a strong zone. Yeah, I don't like it. Anyways, look for that reversal. Square, strong company. One of the Canadian stars company. Even if you were to look at the daily chart, you know, it's a straight, nice continuation. But from here, we can see increased volatility now. Okay. ABC, let's see if this extension target makes sense. 1-to-1 extension, that is where we're bouncing from. Look what a beauty that is. Hit that 1-to-1 extension just over, just under. Same as how it usually works. Just under a little bit. And then we're bouncing from there. Amazing entry spot. Hope someone caught that. 1-to-1 extension. This was an easy play. And then as it moved up, you would just move your stop, you know, somewhere under 200 now. But let's see that follow through on Monday, Tuesday. 200. So to the high side, there's 32% move potential. Okay. All right, next, ACCD. Accolade. Alright, so this is the kind of reversal that interests me a little bit more because they are agreeing already, slightly favoring, so close to the hammer candlestick. Ideally, we wanted to see a close at the high of the day. Obviously, didn't give it to us, but that's okay. Now let's see where we're. Okay, that makes sense. Oh. Be careful trading this chart. even though this candlesticks look really nice and is one of the rarer green candlesticks out there, do understand that this is a long-term head and shoulders. Would you say weekly? Not as clear on the weekly. You can see it still. So long-term head and shoulders playing out, left shoulder, right shoulder, and basically what we drew here is a neckline. Didn't even mean to, but there's a neckline. We're now broken down under. From here, generally the idea is you're going to see more follow through. So let's see what the reaction looks like on the daily 8. This bounce is purely still just a bounce. We were extended from the daily 8. So chart, unless we see it, there's always a potential that you see a V-shaped recovery. It's because essentially this head and shoulders have played out and we have seen a little bit of follow through already. But you know, it's going to be harder to catch that downside, that reversal. So with the head and shoulders, you know, higher high, higher low, lower high, we did not touch that one-to-one extension yet, which would make me think that there is, after the touch of the daily 8, there would likely be a little bit more potential for downside. Right. Next, TXG. So again, one of the more ideal candlesticks. It is green. There is bull divergence that's formed. Due to the lower wick, let's draw to there. So slight bull divergence, not as strong as some of the other ones we've seen before this one. But regardless, it is a bull divergence. I believe we have reached that one-to-one extension. Oh yeah, we passed it. We passed it. So chart is weak. That 0.382. That is 0.382. So long-term wise, chart is still okay. The pullback makes sense, but the pullback is a lot faster than ideal. So from here, would anticipate a touch on the daily 8 and then likely to see, anticipation would be to see a little bit further downside action. Key zone. Yeah, this makes sense. Alright, so key zone is going to be, the upper part of the key zone is going to be around where that daily 8 will be. Depending on how fast we move, it's going to be somewhere around there. Other than that, I think the last one to check, 0.382, right there. So would anticipate the bounce to about 0.382, maybe the upper part of the key zone, and then the rejection from there. Watch for the reaction there. Next, which one is this? TXG, CMLF. I don't think we're going to cover all the ARC trades. Let's try to, but let's speed it up a little bit. I'm going to try to speed it up, but these are all new tickers, so it's going to take a little bit longer to draw. Watch for the patterns, draw the patterns. Yeah, there we go. So previous resistance broke over and never came back to back test. Now we filled the gap and came back to back test. We are seeing decent buying pressure, decent lower wicks. Other than that, I don't see too much. Low risk play. Stop right on that trend line. So low risk play. Daily 8 is already under the 0.382. So the bounce is going to be a lot weaker the anticipation would be, because one would anticipate a reaction around the 88, but generally the balances you want to be looking for a bounce to the 0.382. But because the 88 is already under it, the chances are a little bit less. Let's see what the extension looks like. Did not reach that 1-to-1 extension yet. Potential for further downside. Daily is not oversold either. Yeah, not an ideal chart to be playing. BLI. This new all-time low. Okay, we made new all-time low. Not even gonna bother looking at this chart. Channel ABC. Let's draw some quick notes. ABC 1-to-1 is still further away, and the channel would be somewhere along. Okay, no, that doesn't work. Let's see if this works better. This would make more sense. Yeah, break of the channel, making new lower lows. 1-to-1 extension is still further. Chart looks weak. All right, next one. Let's see how shop's doing. Wow, amazing. Wedge, broke over, back test, stall, almost back test, big run, coming back, now another back test. Huge lower wick, hammer formation. Let's see, trend line. There's a potential trend line from here. Come on, let me zoom in. All right. Oh, so close. So close to that trend line. Can't really draw any higher, so that this trend line makes sense. Shop looks good for a reversal from here. Yeah, shop looks good for a reversal from here. What is this, June 12th? Okay. Watch for confirmation Monday, Tuesday. Shop definitely looks like a volume climax at the low end of a bear trend. 1-to-1 extension been reached. 1-to-1 extension has been reached. Shop looks a lot better for a bounce. So let's make a note of it. Next is Fate. Okay, there we go. Fate. I don't think we've reached a trend line yet. Does not look like we have. 16, where is it? There we go. So that's the original trend line. Now we are seeing an increased momentum trend line. Somewhere around there. Ah, look at that. You gotta love it when you're drawing like this. You know, you just doing your drawing. Don't care what's happening. And this is good practice in case you guys want to do it this way. You know, don't look at the current price action. Look at the previous price action. Use what's already happened to try to predict what's going to happen. And as you're drawing this, if you move your chart, you move your chart over to confirm, and you see a confirmation, that is an amazing feeling. So try to do this. Give it some practice. This is what you used to do. Don't look at the current price chart. If it's a blank chart, if it's a blank chart and you're seeing something like this, then just move it over. Use what's over here that's already happened to see if it does validate what you would have predicted to happen. had the chart been on your top watch, you know, try to see if this was on your top watch. Obviously you would have had these two trend lines drawn already, ideally, and then see if there's a reaction. And that was a beautiful feeling, you know, draw increased momentum trend line, we see a bounce straight from there. Still not coming back to fill the gap, so there is a gap. Make sure you make a note of it, because this is a relatively big gap. If this trend line is to be lost, would anticipate a fill on this gap. So the trend line must hold. And bulls obviously know that as well, because we are seeing a huge lower wick forming from here. I'm just wondering if there's another trend line here. There is. So this is still just a bounce. The trend is bear. I'm seeing a potential of a channel forming, or even a head and shoulder. There's a lot of things. Let's see, 1, 2. We have broken the neckline already. Okay. Okay, so potential for a long-term wedge. Long-term wedge. This upper trend line, this lower trend line. So this trend line, the increased momentum trend line, must hold. Watch for a reaction around that 88. You're gonna want a break of that 88 to see a retest of this upper trend line. If not, would be looking at down here the gap fill. Potential for it. There is still a lower trend line here that has been serving as support. 1, 2, 3, didn't come back down yet. Choppy chart. What is this? Fate. Next, EXPC. Right, another blank chart. Let's see how this works. Same idea, you know. As you're practicing, does that make sense? You know, use 2, 3 points. Bounce, 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 bounce. Makes sense. I like this. And we're under. So then if we're under, 1, 2, not seeing anything else aside from a key price. That is right here, 11.45. And that's where we're bouncing from. Off by 3 cents. I mean, of course, you could have drawn this as a zone, but I like, you know, so many wicks right around there. So, and then if you zoom out, 3 cents shows you it's going to be around there. So 11.45, that is a key hold, but chart remains weak. Even the bounce, you can see that it's still only bounced to that previous Thursday's wick. Didn't even get over it. So bounce is weak, chart is weak. Next, TXG. Did we review this? Yes, we did. Okay. PCAR. Oh, we did. Seeing potential for a long-term channel. Okay. Not a clear channel. There's lots of chops. It's going to be a hard ticker to play. But if you're playing on the longer time frames, weekly, see, this makes sense. Rejection, rejection, triple rejection, breakout, fake out, immediate huge sell off on the weekly. And these are still support. So potential for a long-term channel to form, weekly channel. All right, probably not going to be that long, but somewhere around there. Keep your eyes on it. We did not come back to backtest the lower trend line of the channel yet. meaning chart is relatively strong. Key price to hold is going to be somewhere around there, 90 bucks. Yeah. In the middle, kind of chop, no interest. Next, MVS. Oh no, NVS. There we go. Oh, I see what's going on. My VWAP is showing up. It's still showing up. All right, there we go. That's should make it a little bit easier view for you guys. I should take this off too. There we go. Okay, PCAR. It just looks like chop. Long-term chop. If you want to play this, I would say likely to play on the monthly trend line or monthly timeline, because this chart, even on the monthly, you know, you can see chop, 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 chop. So it's gonna be hard, especially if you're playing on the daily. No clear trend lines. It'll be an amazing chart to play if you can find what the pattern is, because there's so much buying and shorting opportunities. PCAR. So the only one that I'm seeing is potentially a lower trend line here, and then let's see if this works. That doesn't really work either. There's so many closes above, but you could say that this is a rising megaphone pattern. And then from here, you know, just understand there is a lot of breakout fakeouts. If you do see a chart breaking over this trend line, don't get comfortable, don't get greedy. If you're playing this ticker, make sure to take profits if you see a breakout on this upper trend line, because breakout fakeout, slight breakout fakeout, and another breakout fakeout. So lower trend line, clear ideal entry. You know, even if you enter right here, break down, fake out, and from here you'd be looking at, let's say you didn't sell the top, of course, you know, 27%, still decent. However, it is 15 months play, so a lot harder of a chart to play, especially if you're a day trader. More so a chart, more so a ticker for holding. All right, what is MVS? Last but not least, on the ARC side. My goodness, that was a lot. But hey, that's why we're doing these videos, right? So on the new tickers, to find potential for new opportunities. Wow, clear rejection. And from here, this one makes more sense. So bounce, breakdown, fake out, support, rejection again. So that is the monthly trend line. And then on the daily, an interesting spot for us to bounce from. Hard chart to trade. That's all I can say. Hard chart to trade. Doesn't seem to react to previous zones too much. You know, you see this previous high, it comes up, break over, and then just chop right around that zone, and then come back to back test it, and then going to new highs. But this kind of action, not ideal. Yeah, not an easy chart to trade. All right, potential reversal candle, decent bull volume, but a lot of it were dip buying, so it is still bull volume, even though the bull real body is very little. Gonna watch for that reaction at the 88, but don't imagine that the bottom is in on this one. Next, oh, that's it for the ARC tickers, and finishing it right at 1 hour mark. Okay, next one up are the Wall Street bets. First one, most popular, GME, getting walked up on the daily. Wicks on both sides, still looks decent. Now remember, as long as GME is trending upwards, there is a potential for further market pullback. This, we now refer to GME as the new VIX. It pays better. So from here, if we were to break, we never closed over this previous high yet, and we are still seeing a rejection at the 150 mark. If we were to trade over this 150 and close over it, would imagine a gap fill to that 213.07 area. Next, AMC. Weaker comparing to GME. Bear volumes trading under the 88. Rejection from the 0.382. Big rejection, and now we're seeing ABC. Yeah, if you were to picking between these two, pick GME. This chart looks relatively weaker. Let's see what the hourly looks like. So on the hourly, there is a descending wedge potential formation. Something like that. This lower wick might not serve as well. So depending on how you draw it, it could be like this, meaning the apex is coming up very soon. Watch for a break on volume. Watch for the volume on the break. All right, next, NG. Bull divergence. Now gonna need that confirmation coming Monday, Tuesday. All right, next, GH. Nice hammer formation. This is the kind of candle you want to see. We did lose everything though. This was the clear trend. Oh, nice, we held it. This is a clear trend line to hold. Previous lots of bounces, lost under, opened under ones, got bought up, closed under ones, next day got bought up. So key trend line to hold, and we are holding it. So for those of you that got entry on GH, this was a nice spot to be buying. And I imagine it lines up with GP as well. No, it didn't. So depending on where you draw it from. Personally, I still like to draw from the last noticeable move, the last impulse move. Some people say, you know, once you lost the last impulse move, then you go to the previous one, then you go to the previous one. But to me, that's more so just like, okay, you're just looking for things now. But, you know, there's no point in using this one. So on this, it somewhat would make sense to use this one, because essentially you're looking for a bounce at this trend line. So you could use this one to see if it does line up with the GP, in the sense if it, none of these three or even four, you know, using any of these four lows, no GP lines up with this trend line, doesn't make sense to bounce here, then that makes it a lot weaker. But in this case, it does line up with this GP from back here. The time before last time on the trend line test. So would anticipate further upside on this chart from this bounce. It is, let's see the ABC. Didn't come to the one-to-one extension yet. Makes sense if we were to bounce to the 0.382, which would be right around that 88 mark. So let's move this backwards. This one is played out. This one is the next one. All right, so yeah, What is this? GH looks pretty decent. Moved, or would have missed majority of the move already if you are not in, but there is more move coming, about another $9 at the minimum. So 6%. Upside, not so much. But love the hold of this. This was an amazing hold. Would consider moving it to top watch. All right, next is Tesla. We did yesterday's video. PLTR, we did yesterday's video, but let's take a look at PLTR. Okay, yeah, it's still the same, holding that trend line. Gonna need to see that reversal early next week. Tesla LE. I want to say a channel that's previously there and now we've back tested. Let's see if this works. If we were to do it here, and we broke over and back tested, that would make sense. So we broke over, back tested, came back, finally continued to move. I don't know why I drew it so long. Does not need to be that long. Okay, so back test, go. Now we are seeing now it's basically just trend lines. Not seeing too much of a pattern developing. So potential for long-term channel, but gonna have to keep an eye on it. And what's with these lower wicks at the same spot? So very clear key price, 27.76. You can see rejection from back here, support, 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 broke down under, got bought up right away, and then triple support on the wick. 27.76, a key price to keep an eye on. If that is lost, would anticipate a retest of this lower trend line. All right, next, IPO. And my Siri is talking to me. IPO. Nice hold on the GP. Lost it by huge lower wick coming in. Not too extended. I feel like we did IPO. Okay, that's interesting. Why is this all the way down here? Anyways, hold of GP relatively strong, trading under the trend line. From here, anticipating a bounce only. Majority of the tickers, including market, we are just looking for a bounce. Remember that. Until the market trend changes, these are still just bounces. So the 0.382 lines up with the upper zone of the key, the upper area of the key zone, would anticipate some sort of reaction there. But based on the lower wick, we could very well just blast through it and blast through the 88, back test the lower trend line before the next leg down. All right, next, NYC, New York City. Oh, it is New York City. Real estate. Wow. Wow. Holy, I hope someone didn't trade back here. Wow. Nice move, nice move. And then 900. Jesus. 96% drop. Holy. And then from there we continue to drop. 99.11%. Wow. Someone's portfolio might have been wiped on this move. Jeez. That could be a split, actually. I don't know what I'm thinking. Yeah, this could very well be a split. But, look at it. 900. Oh, split. There we go. Oh my god. REIT for it to drop that much, hey. I don't know why it does this, but the generally trading view would adjust the charts accordingly. I don't know why they did this. Like it just throws everything off. Normally they would adjust the previous price to match the current prices. Wow. That's trippy. So even on the daily chart, it's going to be hard to read because of this huge supposedly drop. But from here, let's see. Spinning bottom candle, potential reversal. From here, we are looking at any trend lines. Oh my god, it's hard to see. No trend lines that I'm seeing. Overall, still bearish. Okay, wait. There we go. Previous rejections now coming up, serving as potential support. So there is a potential for a reversal. Watch for confirmation Monday, Tuesday on bull volume. If that doesn't come in, remember, chart is still bearish. Right now, this could be the higher low, but you're going to need to see the confirmation breaking over this 1037 to make a higher high on the daily. All right, next, RKT. I think some people make good money on this. Look at that pop. Jesus, 71%. Congrats, RKT bulls from before. And you know, when you see a pop like that, take profits. And next 3 days, sell off. Now we're trading under the 88, but sell off volume is very little. And we are seeing a hold of the previous high before the pop. That's funny because we were looking at this chart right before the huge pop. We're looking at it somewhere around here. Now the hold of this key zone was beauty. Didn't get in though. Had you gone in, hope someone did from the channel. That is 130% move. All right. So from here, what are we looking at? Gap fill now done. There is another gap down below. Chart remains weak. Gave everything back. Would anticipate further downside actually. There is a gap down below, so remember that. Next, SR, and this is the last of the Wall Street bet tickers. Then we will move to a few other ones and then wrap it up from there. Do a recap from there. So on here, I like the chart. Daily just keeps, ever since the reversal from back here, the higher low, higher high, you just see the daily just continue to, now we get the weekly reversal. Yeah, so daily was higher low, higher high, higher low, or higher high, higher low, and now we're making a higher high. And on the weekly, we have now gone the lower high, higher low, and now we're making higher high. Weekly trend has changed. SR, Spire, could be an interesting ticker to trade. Let's see how it reacts to the fib extensions. Got near that 1 to 1.618. Didn't quite touch it. Okay. And then from this move, We retrace to about the 0.5. 1, 2. And from this move, nice GP hold. Okay, so it does respect fibs pretty decently. So whenever you look at new tickers, especially if you're trying to figure out what's going on with the chart, how to determine what tools to use to determine what's going to happen, you want to backtest. Backtest your tools first, see if they do work. So in this case, it did react to the GP before the bounce. The bounce went over to near that 1 to 1.618. So I would say that, it's 50 cents off, close enough. And then the next one, the pullback, it did react at the 0.5 before a slight bounce. So essentially we pull back to near that GP again. So it does work decently with fibs in this case. So from here, what you would do then is do a projection of where the run is going to. And the 1-to-1 extension target is at 73.64. Based on the last time, we fell a little bit short of it, so would anticipate somewhere around. So we are trading over 70. Would anticipate somewhere around 73, and then 75 psychological. So it doesn't react to it hasn't reacted to the fib extension perfectly before. Let's see if this one did. So lower high, lower low, lower high. This one didn't. And if we were to move this lower high to this lower low to this lower high, it doesn't either. So it doesn't react to fib extension all that well, but it does react to fibs decently. So target would be around that 72, 73, between 73 to 75 mark. All right, that's it for the Wall Street bets. Next, I'm going to go over maybe 10, 20 tickers relatively fast. It's just all the ones that we've looked at before to see if there's any interest. First one, for some reason, this one's under YouTube request. Haven't looked at it for some time. Backtest of a previous key zone. Gonna need to see that confirmation Monday, Tuesday. Similar idea. Chart still looks weak because we did not get anywhere near Thursday's high. So this is FUBO, by the way. Next, I think we're seeing a reversal on CLOV. Yeah, so potential reversal candle. Huge sell-off though. Huge sell-off. Chart remains weak. We are extended from the 88. This is just a bounce. This is new lows. We're gonna need to see where the bounce takes us. Next, NEO. Still weak. Lost the key zone from here. Seeing a bounce. This is just a bounce. Next, LI. Similar idea. Lost everything. LI remains weak. FCEL. Our ideal buy, hey? Our ideal buy would have had a little bit of gain, but hey, been a while since we looked at this chart. GP, okay, so this GP doesn't work anymore. Let's try the beginning of the GP, beginning of the move, the whole GP, and that is where we are bouncing from. This GP must hold, all right? This is the GP from this whole move since November 2020. This is the GP that must hold. If this is lost, and so far it does still look weak, we are still trading under this trend line from before. So rejection, popped over it, support. Now we're under it again. So chart remains weak. GP must hold. Next, F. Come on, F. Okay, there we go. Fake out, breakout. Breakout, fake out. Breakdown, fake out. Then we got over. Choppy chart. Doesn't interest me. Interestingly, though. Oh, never mind. So it is kind of interesting that we never lost the 88, and we are seeing a decent bounce breaking over Thursday's open already, real body wise. Lots of bear divergences in here, so not too interested. Next, SYY. I don't even know why I cover this ticker. I'm gonna delete it from now on. SYY, back in the channel, holding the lower trend line. Need confirmation Monday, Tuesday to revisit, potential revisit of that upper trend line of the channel. Okay, this no longer plays. Yeah, choppy chart. Yeah, choppy the way I move it too. DKNG. Again, computer is slow today for some reason. I didn't shut it down, so might have to do an update or something on it. Come on, and DKNG. There we go. Nice hold on the key zone, but daily bear divergence would anticipate further downside. So far, versus the market, it still seems relatively strong. Now, looking at this pullback, however, still reminds me of NVDA, the breakout fake out on the long-term sideways action. So there is a potential that we could just, continue to sell off. Keep that in mind. Let's take a look at NVDA while we talk about it. While we are on that topic, come on, NVIDIA. There we go. All right, see, breakout, fake out, sell off, more than ideal, bounce, and then continue to sell off. Hey, good. Okay, at least we hold that. We held that key price to hold this previous high, and then we can see a clear support here, 468.87. Lost it by $1.70, but wicking from it. There's a chance for this chart. Damn, missed the entry. This would have been ideal entry. Even if you were to chop in here, just to bounce from here to the high of the chop is a 26% move. So hope someone got in. Bottom fish play, easy stop out, low of day. If you're in the play, if you're not in the play yet, any entry around open, as long as we're not gapping up like crazy, on Monday is still decent with an easy stop right under Friday's low of 467.17. Next, snow. I'm gonna do this very quickly because, yeah, still weak. Plug. Bull flag formation failed. Chart still looks weak. CCL, I believe, had a decent bounce. Pretty decent bounce. But it's chop. So if you look at this, we made new 52-week highs, and then from there, it came down a lot harder than ideal. So CCL would anticipate further downside, to be honest. Most people probably looking up on this. Yeah, based on the chart, the price action, I would anticipate a little bit further downside. Closing price wise, AAL, American Airlines. Yeah, okay. Bull flag still there. We lost the 88, so that's not ideal. Weekly, still potential for a bull flag. We were extended from the weekly 8. Monthly, still extended. Be patient on this one. There is more upside, but we'll need more price actions because we are still extended on the weekly and the monthly. All right, let's do haven't done this one for you in a while. Kwanzaa. How's BNGO doing? Whoa. Okay, not so good. Let's see. We played this bull flag formation. We played the breakout, and then saw weakness come in. I can't remember where we sold. It was only a very slight green position that we sold. So I hope you've exited. Kwanzaa, not too sure. But I remember I sold somewhere up here. It's definitely not the top. I think it's this candle, the loss of the 88. So now we are at the GP of this whole previous move. Huge price actions on this chart. Holy, $15 drop all the way down to, what is it, 558. That is crazy. Negative 64%. That whole move given back 60 some percent. GP, ideal entry actually. So if we're to look at the consolidation volume, it is increasing now, but it's nothing comparing to this pop back here. Remember, market is still bearish, so from here this is still just a bounce. We will be looking at the reaction at around the 88. Increasing bear volume suggests that there is going to be more further consolidation coming. Huge bear divergence. Doesn't matter how you look at it. Even if you look at it from here, it's still bear divergence. So likely, let's see. So this is playing out. Right, so yeah, just a bounce for now. Next, BBBY, Bed Bath & Beyond. Whoa. Nice base, actually. Come on. What's going on here? So let's clean the chart up. This one no longer in play. This one still in play. And the one-to-one extension no longer in play. I'll keep that. Well, not let me select this. I like it. BBBY. Huge pop, huge give back. Then we're basing off of the previous high. Consolidation volume is low. I like this chart. All right, BBBY. No divergences. Let's see if we're to zoom in closer time frame. No divergences either. I like the volume. All right, BBBY gonna be on top watch. Next, FUBO. Nice lower wicks around this key previous accumulation zone before the breakout. Came back to the zone again before another breakout. Now we're back to the zone again. Potentially, is it gonna be another breakout after? Let's see on the daily. I like the bull divergence. So the low from here to here, this wedge no longer in play. Trend line would still be in play. So let's redraw that somewhere around there. And bull divergence, slight bull divergence. FUBO on top watch. Next, QS. It's going to be about 10 more tickers. QS looks weak. Increasing bear volume, not interested. Next, might as well do this one. Lemonade. Weak, below trend line, nothing. Increasing bear volume, no interest. Potential bold divergence forming from here. Relatively strong bold divergence. However, still just a bounce. We are extended from the daily 8. Continuation Monday, Tuesday. Watch for reaction at that daily 8. Next, just out of curiosity, let's see, Kathy's been selling this TSM, Taiwan Semiconductors, and we are seeing decent sell-offs. No longer in play. This is after a daily bear divergence, a very strong daily bear divergence. You can see from, well, it depends how you draw it. You know, strong bear divergence, and we are seeing this play out. Let's see, this low to the high doesn't make sense. It is beginning of the low to the high. Ha! So chart is still relatively strong. We are holding that 0.382 from this whole move of the last move. Already seeing a potential bounce starting. So overall, considering the daily bear divergence as well as how much we have moved, this chart I would still consider relatively strong. Huge bull divergence now forming. TSM actually looks pretty decent. Yeah. So look at this. This is the low. Yeah, this is the low. Up there. Huge. What is this? Weekly? How do you even do this on a weekly? No. That would still be a daily. So potential for a big daily bull divergence forming after this bear divergence playing out. Keep your eyes on TSM. I will not be playing this directly, but I will be looking at playing this from SOXL point of view, which is a semiconductor triple leveraged. Provides great volatility for a day trader or even just a hold. So considering, keep your eyes on TSM. I will add this to the recap. MSOS. Okay, yeah, a few more tickers. Decent bounce from the 0.382. Still a gap down below. Most ideal entry would be around this area. Excuse me. Previous accumulation before the breakout. So from here, most ideal entry would be around that 38-35 mark after the gap fill. All right, next is, I don't like looking at these names, but all right. So inverse head and shoulders did not play out. We are seeing weaker price action, trading under the key zone. Now what is this? Doesn't apply. Where are we retracing to? Oh. Already passed the GP. Chart is weak. BaiDu. Actually, no, didn't even get to the GP on the bounce. So BaiDu weak as well. Bow flag formation. Daily. Oh, big daily bear divergence playing out. So it's not even just this one. You know, if you come on, there we go. Okay, if you look at it even from here or even the high of here, this is just a crazy bear divergence. Would anticipate further downside. GME. Similar idea, bear divergence playing out. All these runners from before, they're just correcting their bear divergence now. So key is to watch where they're bouncing from. This one's holding decently, but we did lose the previous high, so would not be interested. Next, Ozone. Oh, this one didn't have a bear divergence. Okay. Ozone is a little bit more interesting. I think we held that GP. Okay, so not this one. No, we have not visited the GP yet. So chart still looks weak. Increasing bear volume as well. Not too far extended from the daily. And making new lows. Ideal entry. There we go. GP lining up with the lower trend line of the potential channel. Ozone. Let's add an alert here. I like that. Okay. And next, SCR score. Is it time to add? Not seeing a clear pattern. Gonna be patient on this one. I want to watch what the pattern looks like. This could be a head and shoulder that played out. So you go, oh, wrong way. You go this way, and shoulders. And the neckline would be, so this one is no longer in play. Might as well use that for neckline. Neckline would be somewhere around there. Now we have broken under the neckline. Seeing a little bit of follow through. Bouncing. Does it make sense or bouncing from here? Somewhat. Not strong area though. I would anticipate ideal entry around 1830. So still have my core in. Essentially, we are holding the GP. Do understand that there is a potential that we will go down to that 1880 accumulation zone. There we go. So we revisited the GP from this whole move since 6.7 to 56.7. That's $50 increase. Oh my goodness. 750%. This is actually an ideal hold for GP. Right. Let's see. AC. I'm going to do AC, NUMI, and let's finish it up with Suncor. Right. AC. Still strong. Daily bull flag. Lots of lower wicks. Big buying still there. Decent bear volume. Slight bearish divergence. Slight. If we make new highs, there's a potential for forming a bigger bear divergence. But right now, the chart is still strong. Next, NUMI. And chart's looking a little bit weaker now. What happened? No divergences. No key zones. Oh, okay, maybe not. Let's do from here. Makes sense to be right here. So again, penny stocks, smaller caps, harder to find key zones and trend lines and patterns. All right, so there's a clear key zone that we are currently holding. Increasing bear volume doesn't look so great. Potential for another trend line here. 0.19. Does that make sense? Support, rejection, choppy, support, somewhat makes sense. Let's draw another one. Where's the low? 22, 22. Potential for further downside. Now remember, this one is going to be a long play. It's more so a legalization play, which is still quite far out. So be patient on this one. I just realized my logo's never been on this whole time. There you go, logo. All right. So from here, be patient. Let's see the reaction. We could very well come back down to revisit one of these two trend lines, which is very closely together, which at that point would actually line up with this key price. IPO low and rejections. So ideal entry could be right here. 80 cents. Last but not least, Suncor. So remember guys, right now, this environment is an environment to be patient in. Whether it's long entry, short plays, scalp plays, bounce plays, be patient, wait for the confirmation. So Suncor is breaking over that new 52-week high ever so slightly, still strong, nice bull volume. That bear divergence now forming. So Monday is going to be key. We're going to need to see follow through breaking Friday's high, or is there going to be similar price action towards that? What is this high? 22.39. This is a US ticker, by the way. It's just a lot more easier to refer to the US ticker due to volatility, the liquidity, as well as the price action. So if we're seeing a double top, something along that line, would anticipate further rejection from there due to the daily bear divergence. All right, and let's do a recap before I forget. Almost ended the video. All right, recap. First one. There's 1, 2, 3, 4, 5, 6, 7, 8. So we went through, I don't know, probably like 50 some tickers, and I see 8 with potential. First one, TDOC, amazing bounce so far. Well, bounce hasn't been that great yet, but that leaves a lot of upside coming Monday, Tuesday. There is a slight bull divergence forming on the daily, and we are extended from the daily 8. So hopefully Monday we don't see a gap up open. Want to see that gap down open for an ideal entry right around that top of the key zone, 183.38. TDOC will be on top watch. Next, the other top watch, BEEM. This is okay. Watch for that touch around the GP. You could say that we're there already. Let's see what the after hours look like actually. Nope. Sometimes the after hours will, or pre-market will touch it and then you don't notice it. So this one, essentially we fell a little bit short from the most ideal entry, but there is potential for further move. So make sure to keep an eye out for BEEM. Next one is SHOP. 1-to-1 extension target has been reached and the trend line is holding. So likely way I'm going to be playing this one is probably through mutual fund or ETF kind of thing. We will not be playing the ticker directly, but SHOP, you know, long term, amazing. Look at this, back to 2018. I think that's when we first traded it. Now it's more than 10 times over in price. Well, now it's a little bit under 10 times, but we were trading over near that 15 times already. SHOP, amazing for long-term plays. Next, GH. Similar idea, trend line hold, nice bounce. GP hold. Oh my goodness, this looks amazing. Now I'm just looking at it again. It's yeah, looks amazing. That was an amazing entry from there. From here, would expect the bounce to at least a 144.43. Probably wouldn't be playing this one because it missed majority of the bounce already. This has been a Friday alone, was a 11% move. So GH should be seeing continuation coming Monday, Tuesday. If you're not in, you can consider scalping it. Maybe leaving 1 or 2 for long term. But yeah, chart looks like it will see continuation. Next one, BBBY. Bed Bath & Beyond. Love where it's basing off of. Similar, reminding me of GME, what happened to it, the huge pop and then basing off of the previous high and then before seeing a next leg up. So there's a potential for the same play here on BBBY, Bed Bath & Beyond. Keep your eyes on it. Will definitely be one of my top watches going into next week. All right. And FUBO looks decent. Bull divergence. Previous accumulation zone. Revisited. And now we're holding it. So an potential ideal entry for long-term plays. Right around here. Depending on what your outlook for the company is. Fundamental outlook, that is. Decent bear volume, so that's a little bit cause of concern, but as long as you buy in towards the low of this key zone, and that'll be an easy stop play. And then another one with interest would be TSM, Taiwan Semiconductor. After a daily bear divergence that's potentially played out, there is now a huge bull divergence. This key trend line that's been holding, as long as that key trend line holds, there is potential for further upside. If this key trend line is lost, we'll be looking at lower price actions towards that GP. So easy bottom fish play. And last but not least would be Ozon. Ozon, a potential ideal entry coming up around that GP with a lower trend line. Keep your eyes on it. And that is it. The recap: TDOC, Beam, Shop, GH, BBBY, FUBO, TSM, Ozon. Those are decent setups that would potentially help with better return next week. All right, so that's it for today's video. Don't forget to give a thumbs up, please. If you are looking to build that pot of gold and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. Also, check out our website at totalcontroltraders.com. We offer a 7-day free trial to our chatting platform where trading ideas are shared and charts are reviewed live alongside entries, exits that I make personally. Real time. Hope you guys stay safe and be in control. Thanks for watching. I will see you in our next video.